Luxury home sales boost revenue collection in Mumbai in February, up 79% in a year. That's the headline data from Anarock that makes for our debate topic today. Is this demand for Mumbai's luxury homes sustainable? And will the surge in supply and new launches in this segment in 2022 mean greater deals for home buyers who have the means to buy expensive homes? Joining me today to answer these questions, Anuj Puri, Chairman Anarock, Boman Irani, CMD Rustomjee Group, and also Abhishek Kiran Gupta, CEO and co-founder at CRE Matrix. I'm going to dive straight in. Anuj, so yeah, the data is looking very good. Highest stamp duty collection and registrations in 5 years, best for February. But I mean, how are you splicing it to glean from it that it's really the luxury segment which has done probably or exceptionally better?
So Manisha, the way that we classify luxury, and everybody can have their own classification, is anything above 2.5 crores.
Okay.
Many may say is in Bombay, that is really not luxury 2.5 crores, but that's the way that we have classified. And, the data is showing not only an upward trend from last year to this year, but also consistently from 2019, both on the supply and on the demand. My thought is that there are 5 reasons why we're seeing this uptake. One is really the HNIs, the high net worth individuals, did not get impacted as much during COVID as some of the others. Certainly on the stock market, we saw a lot of people made money, and much of that has been capitalized now and put into luxury homes. Second is many people wanted to upgrade from their old homes to better new homes because of amenities. I saw in Boman's projects as well, where we have seen a lot of people moving from old to new purely because of amenities and maybe also because of the gentry. Third is people have wanted larger. That we know. That, many people still continue to work from home, 2 days a week, 3 days a week, and hence they want larger. I think what has changed during this COVID, in my opinion, which is the fourth point, is that, the physical asset buying today is being thought as less subject to wealth erosion as, perhaps some of the other instruments.
Go ahead.
I'll just complete two other things where we saw this buying. NRIs definitely came in big numbers. And, may have been because of rupee depreciation, may have been because of uncertainty in some of the international markets, and hence, they came in to buy. And lastly, we've seen vibrancy, Manisha, even on the rental side in these luxury spaces. And that's because the expats have started to come back, particularly in Bombay, as a result of which we've seen the rental market grow. And hence, there is more buying spree than because people are able to rent it. So all in all, everything worked in favor of the luxury. Again, I say is luxury or premium, as you may define, above 2.5 crores per unit.
Okay. Your fair points. All of them are very rational, logical, and, everybody does know that these 5 factors are influencing demand in the market. Specifically for luxury, it's good to know that there is a return of NRIs and, of course, rentals have gone up. Boman, now, the big question that everybody has on their minds is, and of course, there are articles now questioning it, that, developers have rushed to get project approvals in 2021, looking at the development premium discount, which was available, which will lower actually your cost of construction as well. I mean, overall cost, not cost of construction. Now, the chatter is that the supply coming into Mumbai market is 1.5x or 6x of what it was in 2019, especially in prime locations where you're present, like Bandra. Now, are we going to see a situation which we actually saw around 15, 16, 17, that the luxury market had pretty much come to a standstill, or are we just reading too much into the supply?
So, Manisha, first of all, yes, there is a huge rush by developers to go ahead and get approvals at a time when the government gave a discount in the premium payments that were there for the BMC. But I think that was a step in the right direction. And even the kind of stock that you're seeing coming in right now is absolutely something that Mumbai can absorb. As a matter of fact, what I am seeing, especially in a place like Bandra, which you mentioned, there are more buildings being built this year per road than there have been built in the last 15, 16 years as such. Having said that, the buying demand is actually genuine. There are real-time buyers who are actually putting in their money. I'm not sure all of them are investors and are only looking at a return. but they are looking at better homes to live in. And by virtue of that, even the redevelopment market, which we kind of serve majorly, we are seeing those that occupy smaller apartments are actually moving towards larger apartments, are making a choice to buy additional area in the building itself, which is under redevelopment. And this gives me the hope that going forward, the apartment sizes, which used to be earlier 2 or very tight 3 bedrooms, are now moving towards 3 and 4 bedrooms, especially in Bandra area. And if you, it is quite interesting to see that the number of 4-bedroom homes that are getting launched today are much larger in the Bandra location than the earlier trend, which used to be the 3-bedroom, which is a safe bet.
Safe bet.
Not only that, Manisha, we've also seen some heavy buying take place in the uber luxury. And Anuj, you classified 2.5 crores to be luxury. We have a slightly different segmentization where up to 7 crores is considered as the aspirational class, and beyond 7 is when we consider as the premium, and then beyond 15 we say it's a super premium property. Now, this is just a change in the analogy. What I'm saying is that the apartments which earlier one would fear trying to sell are actually the ones that are most sought after. And if you just pick up the papers of the last few days, the kind of buying that has taken place, and I don't know whether to attribute this towards the 10 crore rupee ceiling that is coming in for capital gains, or is it just a genuine rush in March for people to buy? But we are seeing a good amount of inquiries taking place, which has been continued. I mean, it's not something that's spurted up majorly, but this inquiry continues to stay strong. The question is, what would it be after March, or, given April, May, what would it be? Just over here, I want to tell you quickly, we did a dipstick of all those apartments that we've been selling above 15 crores, Manisha. And we found that of the 25 apartments that we have in the 25 crore plus category, there was only one that was buying it for capital gains. So really, that may not be the only reason.
So capital gains cap might not be the only reason for this rush, is what you're saying. I'm glad you shared that, because that was going to be my next question. That are we seeing a front loading of demand because, people may have made money through their startups, selling their equity shares, capital gains in the share market, and, are they in a hurry to adjust it? Okay, I'm going to come back to you. And of course, this whole classification of what is luxury, Abhishek and I were doing some data crunching, and I decided that, 500,000 should be at least the luxury point in Mumbai, a market like that. So Abhishek, looking at your data now, CRE Matrix, now what I see is, if I look at the number of launches or the new units which have been launched in the market in 2022 and 23 together, the first few months, are more or less the same as the number of units sold. So 6,370 versus 6,180. I think the numbers are 2021 and 22. So why is then the inventory overhang still looking a slightly large number? I mean, 500,000 priced homes and inventory overhang at 11,700 units is looking like a big number?
Okay. So if you divide 6,500 by 2, because you're talking 2 years, you're talking about 3,200 per year. Right?
So launches and sales have been more or less the same.
Right. Now, if you take the unsold inventory at 12,000 and you just divide for simple math, divide by 3, you're talking about 4 years of unsold overhang, right?
Correct.
Equilibrium, to our mind, and this is a study across different cities in India, is if you're at 3 years of overhang in terms of inventory, that's a very, very sweet spot to be in. Because anyway, the project would take 3 years to complete. So if you've sold the project in 3 years, you're pretty comfortable. So we're just short of 4 years. I wouldn't call it alarming at all. Yes, as Boman mentioned, that there has been a surge in launches. And if in 21 and 22, you saw equal number of sales, I would be actually very happy about it. So if you're between 3 to 4 years of overhang in terms of inventory, I wouldn't worry about it at all. But yes, if this number were to increase to 15,000 and go up to 5 or 6 years, then yes, that could be alarming.
Okay, so you're saying inventory overhang is not a concern. Then tell me, the secondary market in Mumbai is also, there are tons of investors sitting on previous inventory of luxury homes because, when the rich have money, real estate is a big part of their portfolio. So with the new projects, there's going to be competition of the resale units which are going to come into the market as well. Abhishek, what's your own sense of whether there'll be any pressure in terms of prices? Will they remain flat? Looking at the projects announced, will they rise? Where will demand be in the next couple of years? Abhishek? data.
So you will see a gap. Older houses will start not appreciating, right? So the place where I live, which is a 20, 30-year-old building, is going to be difficult to expect any price appreciation there because there are no amenities. You don't have, Indians want to live in a community, they want to live in larger projects, the Nana Nani Park, the creche, the Starbucks, the banquet hall, the swimming pool should all be in my house, if not under the building. So you're going to see more and more gap or divide between newer projects and older projects. The newer projects will see appreciation and the older ones will see sort of flattish. So we cannot compare the two together anymore.
Okay.
You're going to see more and more millennials flying towards or preferring the newer projects. So yes, there'll be a gap.
Okay. Anuj, 4-bedroom apartment sounds like a king-size living. I mean, I've always said no to any opportunities in Mumbai because I said, I can't leave Delhi. The space here is too much. Now I'm beginning to see 4-bedroom apartments from developers like Rustomjee. This is music to the ears. Either they're using space more efficiently, but overall, I mean, coming back to on a more serious note, we've come off a very healthy recovery from COVID, both from a stock market point of view, the feel-good factor, etc. But now we are staring at an economic slowdown. I mean, any which way we look at it, we may not have a recession, but slowdown is imminent. Markets are likely to be very volatile. Do you believe that luxury does not get impacted, or is it more recession-proof, or do you think that buying will kind of slow down and taper?
So, Manisha, I'm going to answer that. But just in addition to what Abhishek and Boman said, I wanted to add a comment each on that. The way Abhishek elaborated, I just want to add one more point in that is, and this I've learned it from Abhishek only. I've worked with him for many, many years. So, Manisha, when we talk about overhang of inventory, it is actually not completed unsold inventory. The moment you put a spade on the ground, we call that as unsold inventory. So that's why you have to be a little bit careful. I just want to put that asterisk and explain to your viewers that we're not talking that unsold inventory, which is completed with lock and key. This is the moment the developer starts building construction, the entire inventory of that development, we take it as unsold inventory because it's available for sale. And that's why Abhishek is saying is that the equilibrium should not be considered as 0. It should be considered as 2 years. And anything above that is what is excess. Anything below that is lower than that, 2 or 3 years. On Boman's point on supply, Manisha, you had mentioned it. My experience over the last 25, 30 years has been on paper, it seems like a perfect storm, that there is going to be too much of supply. But in actual practice, I haven't really seen supply all come up the way that it was planned on paper. Something or the other happened. Approvals delay, bureaucrats change, political party positions changes, new rule comes in. As a result of it all gets staggered. So I do hope is that this time also it will be staggered. Otherwise, you're absolutely right and Boman is right that there is a lot of supply that we see getting built up. Okay. To answer your question, Manisha, am I concerned? I'm absolutely concerned. Both the points that you have said is correct. There is an imminent slowdown we're seeing in the Western world. We can't think is that we're not going to get impacted. Mortgage rates will continue to go up as the Fed increases the rates. The central banks around the world will increase. Mortgage rates will go up to taper down the inflation. So there is a concern. Would it impact luxury premium? Perhaps lesser than it'll impact affordable and mid-level. That's the only thing that I'll say. But to say is that the demand will infinitely continue, despite the mortgage rates going up, despite the property prices going up, despite inflation going up, I think it'll be wrong for us to say is. So there will be tapering of the demand. Now, within that, Manisha, some of the good developers will continue to do very well.
Yeah.
Some of these listed guys will do very well because they are eating somebody else's lunch.
I mean, I have friends who actually aspire for a Rustomjee project. So they're like, okay, when are we going to get raises enough and be able to afford that project? And well, we'll flash for our audience what are some of the luxury project launches which have happened from some of the top developers, and we are making sure that we're only flashing the names of some of the top developers here. But as that's happening, Boman, anything that you're worried of? Next 2 to 3 years, you're in the redevelopment market. You're also launching some premium projects, luxury projects in prime locations of Mumbai. Any concerns at all? Or you're saying let this cycle continue. It's 5 to 7 years cyclical industry and we are just at the start of it. Where are you?
I think this blowing the whistle too soon and saying that there is a slowdown coming and everybody, because that's exactly what happens. It's sentimental buy. People feel good. They buy a larger apartment. They're buying a house. The second thing, I fail to understand why everybody only looks at real estate as purely an investment. It is also a property which one is supposed to enjoy in its entirety by living therein and actually taking the pleasure out of life over there itself. I am very, very glad that we've been through these recessionary cycles where people who thought real estate was only a money-making game and jumped in very soon without having the end game in mind are now out of the system. Today, you have very good developers who are working here. Okay,
all right. So, very positive one with, of course, a dose of some guidance in terms of what you need to be careful of and don't get over exuberant. Gentlemen, thank you very much for joining me for this very interesting discussion. And Boman, that advertisement which I think Sotheby's, which are of course our sponsors, has, your best life is lived in your home, right? That kind of holds true. For everybody buying a home. Thanks so much, gentlemen, for joining me today. Well, moving on, when we return, our PropTech segment, India's first 3D manufacturing company in real estate and how it uses cutting-edge technology to manufacture affordable and sustainable homes. Stay with us.